I figured this would be a good time to do an update on the equities markets, looking at the S&P 500 here, the Spiders Trust S&P 500 ETF, symbol SPY. This is what I use to gauge the overall market breadth of the equities markets in particular. Let's go ahead and dive right into it. Last market cast that I did, I pointed out a couple of trend lines, and I'm going to go ahead and draw those real quick. On the last cast, I had drawn this trend line right here, okay, and I drew that from the low of March 16th to the low of April 18th, and extended that to the right. And as you can see, the price came down and almost bounced right on it right here. Okay, and now it's pierced through it, and now it's become resistance, along with this red line here being the 50-day moving average. Okay, and now the 10-day moving average is also coming together here. What does this mean to the overall market breadth? I think now, back on that cast, I had done an update of what my positions are as far as exposure to stock and exposure to non-stock instruments like cash, anything other than stock. Previous to that cast, it was a 25% exposure to equities, and on that cast, I moved it to 50-50. And the only reason why I didn't move more equity in was because I was concerned about this type of action here with higher volume down days and lower volume up days. And this has been a concern for some time now, actually for most of the year. I mean, if I go back here to February, okay, again, the down days, high volume. And if you've been following this cast, I mean, I've called this out most of the year. This is a pattern very familiar to market tops when we have this type of volume characteristic of the high volume down day and low volume up day. But anyhow, fast forwarding again here, the market has a lot of overhead resistance right now. Here's the session for June 2nd. Okay, again, volume came in a little lighter than the first, however, still again above average. That's what this yellow line here is, your average line, 50-day volume average. Anyhow, I'm looking at a higher volume days here again, the down day. We did pierce through support levels and managed to close back above support, so that's a good thing. However, we're faced with a lot of resistance. Let me show you what that looks like. Okay, I zoomed out a little bit, and I can show you now. This is a new resistance line now that has developed here, and that's from the 2nd of May right here at the top of that day up to the top of May 31st. So basically now we are dealing with that resistance level right there too. So not only do we have the 50-day to contend with, the 10-day moving average, but we also have this this new trend line here. I reduced my exposure from, at least on my long-term investments, from 50% back to 25%. The longer this pattern develops, the more and more defensive I'm getting. Okay, I mean, I think for the year the S&P is up only like 4.25. No, actually about 4.75%. So in an environment like that, I mean, here's the beginning of the year right here. So I mean, look at all this chop right here. It's just a real tough environment to. Usually when you have all this chop, intermediate to long-term investors fare better. Now short-term investments, individual stock investments, this is a rough ride right here. If the investment activity is short-term stock investing, where you're not only aggressive with establishing new positions, but hand in hand goes being defensive as well, having a short-term outlook. If things don't go right right away, you get out of the position. This is a real rough ride right here, and the best stock pickers out there are having a rough time right now. It is just when the market is doing this whipsaw, there's just a lot of wide swings in individual stocks. So individual stocks right now, I'm a hold. I'm not initiating anything right now, simply because of all of the overhead resistance. I like to see the S&P at least trade and close above the 50-day and the 10-day, and also this trend line here. This is going to act like a roof now, resistance. Okay, so it might bang its head on there. And I spoke a while back about the 200-day moving average coming in and getting tighter up here. And that's exactly what it's doing. It's just climbing and actually coming and meeting this price now. So we could see it is it's getting more likely that this price might come down to the 200-day moving average. Don't know when, but the closer it gets to it, that's what happens with prices. They always want to regress to what is called the mean, the average, and they'll come right back in here, back to the 50-day, back to the 10-day. So again, intermediate to long-term positions are 25% stock. I think the highest exposure we've had for some time is 50%, and this is why. Just the market is just dismal. I mean, from January, we've seen what, 4.75, maybe 5%. If you are long, just holding. So I think for the characteristics that the market has shown, that is not enough to apply more than 50% equity exposure, 50% stock exposure. But now again, back to 25%. 8 a.m. tomorrow on the 3rd, we have a employment situation number coming out pre-market. I think that is typically that's a normal, typically that's an important number to be paying attention to. I mean, as of late, for a good part of the last 2 to 3 years, the jobs has been lacking. However, I think it's even more important now because of this pivotal stance where the market price is here on the S&P. I think a real bad disappointing number can really make this market come down even further, or a better number maybe have a little bounce into these areas here. But I think a bad number will be very detrimental to the market, and I think you'll see lower prices if that's the case. So love to see the way, not what the number is, but again, I always emphasize, let's see how the market reacts to that number. Okay, it's not always what stock earnings are, or what a number is, or expectations. It's more important what the price does in reaction to. In other words, where's the money going, right? Money talks. So we're going to be looking at that. So again, look for that announcement at 8 o'clock on the 3rd, Friday. I think that'll be a very telling number as far as what this market wants to do in the near term. Okay, guys, don't want to drag it out anymore. This is again StockMarketPlan.com. Make sure you check us out on Twitter and on Facebook. Become a fan. Any questions you have, you can post them on Facebook. You can post them on the website. I'll be more than happy to address those. Okay, guys, good luck and thanks for watching. We will talk to you soon. Bye-bye.